As an individual watching this video, will you guys prefer to be owning your own house or to be in a rented one? Well, for Americans, there is no second thought. In the final half of 2022, a typical house was sold for $468K, which is more than 40% than that from the start of the pandemic. Some think that Wall Street is behind the rising prices. A study found out that the tax money contributed to buying single-family homes. Since 2010, big investors are not interested in rental properties. Even that changed after the pandemic. Big investors started acquiring rental properties and even through loans started building new ones. These investors started seeing the investment on single-family homes as a fund that could beat inflation. Yes, you heard it right, inflation. So, you guys got the answer right? Well, the influx of institutional money in the rental market results in the surge of rental properties, especially single-family rental properties. This was fueled by easy loan sanctions from the banks. For your surprise, there's a huge surge in another community? Have any guesses? Well, it's the rise of corporate landlords. In a survey conducted on a residence, it was observed a huge surge in them since the financial crisis. What do you think might be the reason for the surge of corporate landlords? Share your thoughts in the comments. In 2023 in the US, most of the houses will be owned by individuals and short-term investors. Will institutions only account for 1% of the overall rental housing in the United States and 2% of the single-family homes? There is a group of companies that lead the industry which includes Pretium, Blackstone, American Homes 4 Rent, etc., are only a few names from the list. It was found that Pretium owns 90,000 single-family homes and the company is owned by Don Mullen. Invitation Homes was started by Blackstone, who sold their positions recently, who own more than 80,000 single-family homes. Wayne Hughes started American Homes 4 Rent, who owns about 60,000 single-family homes. In 2021, these corporate belts started buying homes, and this accounts for 28% of all the homes sold in Texas. As these corporations started owning a large part of single-family homes, the rentals started to surge. In a study, it was found that for a two-detached home increased about 35% in Atlanta and 44% in Tampa. These values are up by 24% when compared nationally. The institutions started taking advantage of the pandemic. Normal peers classified as middle class in the US got heavily affected by the pandemic. Due to the same, they were forced to sell off their properties at a cheaper rate to these institutions. The institutions don't forget to bargain, as they are profit-oriented and don't value emotions. Initially, the institutions stayed away from single-family rentals. The reason is simple. Let's have a look into it. This is basically dependent upon the fund that the investment company arises, as the returns are based on profit sharing. So let's say the investors get a profit of 70% while the company gets 30%. So if the company could raise more funds, then the returns will be higher for them. For this very reason, the institutions avoided buying rentals individually. Then came the financial crisis, which made the single-family rental properties an attractive investment. Now let's get into an interesting valuation. The Real Estate Investment Trust provided a return rate of 8.4%. This happened when S&P was underperforming at 90.4%. These corporations are short-term goal-oriented, making profits in the short term by selling at a larger price or by doing an initial public offering, which allows for the public to invest. This happened in the case of Invitation Homes. This perspective was against a smaller landlord who was looking for a long-term gain. Now let's get into a study where it is said that by 2030, the institutions will be holding more than 7.6 million single-family homes. The corporations are very clear about the solution that could arise in the housing market. They are aware that by building fast, the problem could be solved. In the late 1970s, the houses sprouting out every year counted for more than 4 lakhs. But in 2020, it is only 675,000. Yes, you heard it right. A declination of about 7 times. What may be the reason for this? Is this because no more lands are available for 4 lakhs housing every year? Or is it due to the lack of capital? What do you guys think? But we had quite a different situation where lending in Wall Street led to a crash in the late 2000s. As a result, around 8 million mortgaged homes were foreclosed between 2007 and 2016. By the time these distressed houses were largely bought by these institutions, this helped the housing market. Due to the crash, the entire housing market was in a damage, and the helping hand lent by the institutions was actually a boon. This reminded me of the retail and foreign investors who came into the crashing stock market during the COVID and lend a helping a hand for the markets to recover. But this situation was seen in a different way by the housing and urban development. They were with the perspective that if those foreclosed houses were kept as such and by allowing the renters to stay. Still, many people are of the opinion that these institutions made the housing market better by paying better. Moreover, there is an opinion that those who are not able to provide rental was far way better than high-paying individuals. Now let's discuss a social stigma that is present in our society. It is said that once a person reaches his or her productive age, then he should be building his own new home, his own new vehicle, etc. But society doesn't see the backside of these. Youngsters spending huge money on materialistic things by taking loans from banks can make them end up in a ditch. This will take out their happiness and the freedom that might have come to them if they own a rental property rather than a new one. Hence, for a person who is traveling for most part of his life, it is better to rent than to buy. Moreover, this was affected by the housing premium, which is a variable. But this is completely personal. Now, what do you guys think of the things that lead to huge demand for these single-family apartments? Let's see. After the financial crisis, there were two options for the people to choose a house. First is to have a home which is attached. That means wall sharing of a large number of houses. Second option is to choose a single-family house in their likely neighborhood. The people who opt for privacy and a likely background found the second option attractive and started renting for single-family rentals. Another reason is low interest rates. Apart from investing in stocks, the area that provides a safe and steady return is to invest in bonds. So bonds are basically the process in which the government lends money from the people for a period of time in return for a particular interest rate. But it is found recently that the interest rates for treasury bonds are far lower than 1%. As a result, the investors started losing money. So the institutions started looking for another region that could generate safe and steady returns. They finally end up with single-family rentals. The deal with rentals are done by analyzing something called as cap rate. This is the profit generated by subtracting the rental income obtained from the property and the expenses for managing the property. Now, you might have been thinking of the problems that could arise in handling hundreds and thousands of single-family rentals. But through the advancement of technology, made a possible solution for this problem. Another problem facing today in the housing industry is that there is an imbalance in supply and demand. Supply is still low and hence causing the inflation to rise. As a solution for this, to improve the supply, the institutions started building homes. Also, if the homes remain unrented for over a year, it could still occur. Hence, instead of a cash flow, the house is actually a liability taking away money from the institutions. This results in the closing and selling of the houses. Do you guys have any vacuum space? Then, this is the right time to either rent it or sell it off. Otherwise, taxes will eat you. Also, the institutions are very aware of rent control. Otherwise, they will lose their clients. An eviction act was put forward. Moreover, these institutions are ready to spend huge money for rent control. Blackstone spent around $7 million for a single interest. So a free tip for every youngsters watching the video will save and invest more than you spend. This is the only way you could beat inflation. The investment could be anything like stocks, bonds, REITs, gold, etc. The only thing we should start is to invest for financial independence. So all the best for your investment journey. So that's all for today. Hope you guys enjoyed the video. Share in the comments which is the part that you found interesting and the reason behind the same. Also, share about what you think of. See you until then. Bye.